and welcome to today's A-Team Group webinar on progress and challenges in taxonomy and standards in the ESG world. My name's Sarah Underwood. I'm an editor here at A-Team Group and I'll be moderating the webinar. Our expert speakers today are Bruno Marade, if I've got that right, Global Head of Responsible Investment at Egon Asset Management, Ghislaine Parise, Head of Insurance Solutions at Fidelity International, and Alex Marola, Executive Director of Commercial Strategies, ESG and Private Markets, Software Solutions at S&P Global Market Intelligence. I'll ask them all to introduce themselves in just a minute, but first a few hints and tips for using the webinar. To the right of your screen, you'll see a panel for Slido questions and polls. We'll be running 3 polls during the webinar, so I'll let you know when they're coming up. And do please vote so that we can engage your interest and where you're at in your ESG journey. In terms of questions, please type them in there whenever you want to. We'll take them as we go along, and we'll take as many as we can. So while the experts are here, time to put your questions to them. Fantastic, thank you. Okay, enough of me and over to our speakers. Bruno, please introduce yourself and tell us a little bit about your interest here.
Thank you, Sarah. So I am the Global Head of Responsible Investment for Aegon Asset Management. I'm also on the consultative working group for ESMA's network on sustainability. So I'm very much involved with regulations and data and taxonomies at the moment. It's a topic of my day-to-day interest, I would say.
Thank you. And Ghislaine.
So myself, I am in the financial industry for 25 years. 8 years ago, I've created a working group of all European insurer asset managers to take care of data for the financial industry. And during the 2 last years, in Findatex, that is a working group created by all European associations or insurance, banking, and so on, we have been working on standardizing all the ESG data for taxonomy, SFDR, MiFID, IDD, and so on. So that's the same topic as for Bruno.
Okay, thank you. And Alex, over to you.
It's a pleasure to join everyone today. So my name is Alex Marola, and for the past 10 plus years, I've really been focused in the financial technology space. And spent a lot of time with our portfolio monitoring technology high level, really helping private companies bring structure to all their data around these private companies. So my background's in computer engineering, so I've always focused on integration and scale with our clients. And as I've transitioned out of the sales world and really trying to work more as an architect with our clients, helping them manage these different taxonomies, helping them prepare for regulatory disclosure, investor questions, and really ensure that they're really trying to understand the impact they're making with investments has really been an exciting opportunity to help our clients with, and really excited to dig into that with everyone.
Excellent. I'm sure we're going to have a good discussion. We've got lots of skill in the room. So let's get going. But before we start the Q&A, let's run an audience poll question. It is, to what extent has your organization adopted available ESG taxonomies and industry standards? So while you answer the question, let me come to Alex to set the scene and share his view on the extent to which financial markets participants have adopted these taxonomies and standards, which are the ones available in the market.
Thank you, Sarah. So I think when we look at the markets, obviously holistically, asset management is continuing to evolve, beyond purely, public investments. That being said, starting within the the traditional asset management world, most common frameworks we're seeing today are the SFDR regulations under the EU, and as well as the UN's TCFD, disclosure requirements and recommendations. At the end of the day, these are the most commonly adopted. We do see other providers who look at more industry-specific metrics. At the end of the day, what I try and preach is really understanding that underlying company. So when there's reporting around it, they understand that holistic impact. But they're typically then trying to distill that data and align it across those more common frameworks today.
Okay, thank you. Ghislaine, what would you add? What are you seeing out there in terms of how quickly these taxonomies and standards are being adopted?
Across Europe, a part of UK, there is SFDR who started coming with the integration of ESG within MiFID and IDD. That's regulation that started in August. We were required to question the end client of sustainability preferences. So we have created some standard based on what the regulator is doing. And I may say that, as always, what the regulator is asking is moving ahead of what could be seen as a kind of commitment. So where before this regulation, TCFD, this kind of thing was of interest, now for continental Europe, the focus for this 500 million, people area is really what the SFDR regulation asks. And the SFDR regulation have defined, many taxonomy, sustainable investment metrics, at least, 100 different metrics are very precise. And I may say that from asset manager to insurance banking, these metrics are really are really progressing very well and being used by everybody here.
Okay, and we've got plenty more to come down the line. So let's see those poll results, if we may. And Alex, perhaps you'd like to comment on how people are getting on. That's good. Yeah. Alex, can you see that? Would you like to comment on those results?
Sorry, I've just muted myself there. No, so I was just digesting this. I think this is, great to see. And, I think similarly in line, a little bit higher than some of the polling, we had done with a recent survey, with 40%, almost 40% of folks, starting to adopt a base taxonomy. I think that's fantastic. One of the challenges I know we work with clients a lot on is the lack of a universal standard. So everyone needs to really make their own decisions and choices around that. But I still think there's continued room for, reevaluation, ensuring that this is continuing to meet your needs, continuing to align with your own priorities, as well as the other parties that we're disclosing this information to. So obviously a bit of room for growth here, though. Still about 60% of the folks are trying to bring this all together.
Okay, excellent, fine. Let's unusually in our webinars, but let's run another poll to find out what the challenges are here for our audience in terms of the taxonomies and standards. So if you could launch the next poll, please. And while our audience answers that question, and on this occasion, you can tick as many other boxes as are appropriate to your organization. Let me bring in Bruno to talk about the challenges of these taxonomies and how best they can be addressed.
Sure, yeah. I mean, for us, the taxonomy of most concern, of course, is the EU taxonomy for sustainable investments. And the biggest challenge there is that it's incomplete. So only 2 out of the 6 environmental objectives are covered so far, and the climate mitigation objective is still the subject of many protests and discussion. You might have seen reporting just this week about NGOs potentially suing the European Commission for inclusion of nuclear energy in one of those taxonomy objectives. And also there is no taxonomy for social objectives to date as well. So aside from that, to plug these gaps, we've got a vague principles-based definition in the SFDR legislation of what sustainable investing actually means and how it should be defined. And that in itself is already the subject of clarification requests from the regulators to the legislative. So overall, that paints a picture of significant regulatory uncertainty and a constant debate. And that creates implementation hesitation, let's say, or wariness. And in the worst case, we might actually see a move away from sustainable investments amongst the asset management community, simply because there is so much regulatory uncertainty and a lack of objective compliance standards here. Aside from the EU, away from the EU, the other big challenge is jurisdictional differences, and that makes it very challenging to run global, cost-efficient asset management strategies. We see the UK already going its own way with its own sustainability disclosure regulation, whereas in the US, the SEC is still worrying about high-level ESG definitions, not even getting into the details of sustainable investment that we're seeing in the EU.
Okay, thank you very much, Alex. What would you add to that in terms of the challenges here?
I think Bruno are going to really hit a lot of the key themes, on the head there. When we think about the challenges in taxonomies, to me, it really comes down to that, what is the goal that we're focused around? I think as Bruno highlighted, the challenge around SFDR, but the approach, at least I always, really think is the goal around this is what is the level playing field for us to understand impact and really have a better comparison of these investments. There's certainly the challenge of managing around greenwashing, ensuring that, that we'll say the description of the investment product is aligning with the true impact. I think that's really we'll say in this emerging market of ESG, regulation and guidance, without that consistency, one really needs to be a conscious investor. And I also think the continued evolution, like we've seen this within, the SFDR regulation, as we all wait on the SEC's, guidance there, it's that change in evolution that, can be a problem for an organization. So I think one shouldn't sit and hesitate without, implementing something. I think we're going to really highlight that key, implementation delay risk of if it's not ready yet, we shouldn't move. But, if we're left waiting here, we're going to be very much behind the 8 ball when, these requirements are no longer, a nice to have. Though, obviously there are regulations in place today, just mean that they're only going to continue to grow.
Okay, that's great. Bruno, can I come back to you on something you mentioned in your answer? You suggested some asset managers might decide not to make these kinds of investments. How likely do you think that is? Obviously, we can't know now, but what's the kind of feeling in your part of the industry?
Well, whether they'll make the investments or not is still an open question, but what we're already seeing is some asset managers stepping down from the claims that they are making those investments.
Oh, okay.
So you already see some Article 9 downgrades to Article 8, and
Right.
some investment managers thinking twice about, do we really want to even try to make sustainable investments or even talk about sustainable investments if it's so uncertain what we can and can't say with respect to these investments. So I think that that's a bit of a risk, that we get distracted worrying too much about the disclosures and we forget to actually try and have some of the impacts that Alex is talking about. That's what it's all about. Really, that's what I worry about. I want to see the impact.
Right. Excellent. Let's see the poll results. And Bruno, would you like to comment on these? They are the challenges that our audience is facing around taxonomies and standards. And there they are.
Yeah, well, it reflects what we've been talking about. I think, the lack of industry-wide standards is a really big problem for the industry right now. And the inconsistency between taxonomies geographically, I think, is also a problem. And I mentioned, of course, the limited extent of taxonomy. So it reflects what I've talked about, but I think the order is a little bit different to what I presented. But yeah, it's reassuring to see that people are feeling the same way.
Excellent. Thank you very much indeed for that. Thank you for voting in the poll. And let me come back to you, Ghislaine, and talk a little bit more about standards. What practical approaches can firms take to the problems presented by a lack of ESG standards? Obviously, it's a problem.
I mean, it's really depending from which angle we look at that. Obviously, if we look at climate taxonomy, we could see it pretty limited or social. But if we look more broadly at all the information that at entity level next year, the financial industry in continental Europe have to bring information, there are a lot of metrics. When you look at the principal adverse indicator, there are 64 with methodologies that are well written and so on. So we could say there is a lack of standard, but in practice, there are already a lot of metrics that are defined. And I think if people deep dive and look really at this metric, we could think that they are going to build a taxonomy in themselves, because if they are defined, any bank, any insurer, when they are going to question a client or they are going to report, they are going to align on that. An NGO could start obviously saying, okay, what's your GHG emission? What is your carbon emission? What is the gender equality of your investment? So the standards are merging from in practice what the regulator is using as metrics. Because, when you are on the IDD and MiFID side and you have some liability with end client, if it's not well defined, it's difficult for you to use. But if the metrics are well defined, so I think the standards are coming from these metrics defined by the regulator. And in terms of communication, what we have seen is all Europe has been using the European ESG template in which we have around 600 fields. So obviously it does not define exactly what is an ESG rating, does not get, but at least there is a global wave of building standard, of starting building the comparability of products. And I'm going, for example, today to Singapore, because in Asia, the people want to know what's happening as well with SFDR and or using the standards that is emerging today in Europe, because they are very pragmatic standards, I will say.
Okay, thank you. Bruno, how do you think people can approach this at a time of complete, as Ghislaine pointed out, not enough standards, really?
Well, I think for us, it's been all about investing in expertise and growing that confidence to talk about your approaches. I mean, clients, at the end of the day, clients pay us to have an opinion on many issues, and ESG is no different, and arguably where asset managers can still add a lot of value versus, for example, second-guessing credit ratings, which are largely standardized and regulated. So this is what clients pay us for, to actually go out, look at all of this information, build an opinion, document that opinion, defend that opinion, but have an opinion. So I think, it's no reason to shy away from it because you don't have a standard. This is exactly where, the human capital really can make a difference. What it takes is to be clear and transparent about your approach every time. It takes education as well. It takes time to understand what your client's objectives are and what their expectations are in terms of ESG performance and objectives. And, you have to recognize that there isn't really a one-size-fits-all approach. ESG interests and objectives are not homogeneous. You talk to each client, you get a different story about why they want an ESG fund or a sustainable investment fund. It's important that we don't try to be everything to everyone, but build your own approach and be transparent about it.
Okay.
And there is the aspect of, to go with your point, of double materiality. The fact that, the non-financial performance is going to converge with the financial information. And I just say, Bruno, the forward-looking angle, because in non-financial information, there is also the problematic of estimating the future, where it goes. And all this qualitative assessment, I think, is something that only, really asset manager could have, because it's pretty qualitative. The future does not exist in the data.
Yeah. I agree. Yeah, good point.
Okay, thank you. Alex, bringing you back in, if I may. How best firms prepare for compliance as ESG regulations are rolled out, and what data challenges do they face? Let's move on and talk a little bit more about the data, perhaps.
No, I think that's kind of right in line with what Ghislaine and Bruno were highlighting here. Is that one, there is no way to predict the future state of this. But to me, it really comes down to, just fundamentally understanding, what we're trying to disclose and what we're trying to align around. As an example, one of the challenges some of my fund-to-fund clients have really been trying to grapple with currently is around the disclosure requirements they have for all their positions. And since they're not the direct manager of those positions, getting good and quality information, has been a struggle. The managers who are actually putting the capital directly to work here, are in the process of, streamlining and rolling out their, optimal collection approach and disclosure. But that doesn't stop the regulators from requiring these, secondary positions from disclosing their data. So one challenge that we've seen folks trying to grapple around is, filling out the SFDR PAIs and potentially using some proxy estimation data around that. And particularly for the current disclosure, these folks have thousands of different positions, and they're really trying to put their best foot forward, but they're meeting a hard deadline here. I think an important part that we're trying to work with them through is the initial approach around how that is going to be implemented this year, but really planning for the future of how are you going to replace that data with direct data reported from the companies. What is the game plan from those direct investment, those general partners who are managing that capital, how they're going to streamline this disclosure and ensure that they're continuing to, put their best foot forward each year and really try and get that most, succinct and accurate information here. I think that's obviously a big challenge. There's no perfect solution right now, and I'm very interested to hear what Bruno and Ghislaine have around that, current challenge that they're seeing.
Okay, Ghislaine, a practitioner, tell us what the challenges are there for you around the data and sort of preparing for more regulation.
My answer will be strange. I will say there is not a problem of data. There is a lack of data. In practice, European regulator, first the EIOPA for insurance pension has been pretty clear. For SFDR, there mustn't be used at all of proxy data. The data that insurers have to deliver, coming from asset manager or directly from corporate, are the data of corporate. So in practice, here as an asset manager, I think at Fidelity, as Egon, we wait for the corporate to provide this data. So when I look at the principal adverse indicator or the taxonomy and so on, if the corporate don't provide this data, will be zero. I mean, that's it. That's the way it goes. Because we need to come back to the politics here. What the politic want? The politic wants the financial industry, especially in Europe, to get the money going to the corporates, that are changing, are more green, are more social, more governance, and so on. So they want the data coming right from the corporate to show the pressure is on the corporate. Is not that this pressure is disappearing, in proxy data. So today we have a lack of data. And for example, this morning, we have a working group with all European insurers, bank, and asset manager. And the point is, obviously most of the people say, okay, look, there are some areas where we don't have data. There are some points like gender equality at board level. Yes, it's easy to get the data. But gender pay gap, we don't know. There are so many countries where we don't find the information. So I will say that there is a big lack of data, but here it's up to the regulator with CSRD or other regulation to make the corporate bringing to this data. And here I will say that as an asset manager, we are like a pipeline. If there is no oil, but we bring no oil. That's it. The same with data.
Okay, thank you. And coming to you, Bruno, again, just mentioned proxy data and not being used in Europe. How do you expect it to be used more widely? And when will time come when it's not needed? When will the time come when it's not needed anymore?
Yeah, I mean, I was smiling because I was agreeing with so much that Ghislaine was. It's a really good analogy. You know, we're basically a pipeline provider. If there is no information there, then what are we supposed to do? And I think, you know, inevitably, at least for the next 5 years and likely longer, we're going to see a lot of proxy data coming into the market, and whether that will be accepted by regulators or not, more likely not, as Ghislaine pointed out. The fact of the matter is, corporate disclosure rules and standards haven't really accompanied investor demands and disclosure regulations. And, you know, I've posted this question to regulators themselves. And I think the rationale was that investors, by demanding this kind of data from companies, would prompt global disclosure to align and disclose. But I think that is an assumption that we still need to see whether that will bear itself out, whether companies will listen and start disclosing these indicators. I think proxies are based on a growing set of assumptions that present a significant risk to the industry if they don't bear out. And quite rightly, as Ghislaine pointed out, you know, not everything can be proxied in a credible fashion. I mean, how do you proxy gender pay gap? You know, there isn't really a proxy for it. And I would say there's also some proxies out there that are just simply unnecessary, and they're shortcuts, right? So for instance, I'm not very fond of temperature alignment. I think it's based on so many assumptions that it's counterproductive. And some shortcuts are not worth taking and prevent real education about the real issues. But it's, you know, I see it partly as the worldwide TikTok phenomenon, right? Everything needs to be reduced to a 2-minute video, and you know, a proxy data point that is supposed to be completely descriptive of a portfolio is really sometimes too ambitious, I think.
Okay, that's great. Thank you, Alex, as a sort of data expert over there. What would you say about proxy data and going forward?
No, I think very much in line with what Bruno and Ghislaine were saying, that obviously from a regulatory perspective, there are limits where that data, is going to be accepted. What I think, we're seeing more folks attempt to do in the interim is really trying to, figure out that impact, calculation, shall we say. Because, they're trying to understand these firms or these funds and, products are being marketed as, whether it's green, or ESG aligned, whether it's Article, 6, 8, or 9. But again, the accountability there, that process really hasn't been, stress tested. So I think these asset managers are starting to, try and use some of this proxy data to, find, what is, aligned to their original investment thesis, what evolutions, what adjustments they need to make and change there to really ensure, one, if they're marketing a green product, that it's meeting their standards and the requirements that they're aligned to, but also just trying to, get ahead of that, we'll say, future data challenge. Particularly when we see this, we go back to the valuation world, whether you're looking at like a discounted cash flow or, free cash flow from a real estate perspective, that projection over the next few years, folks are not going to exclude that from their calculations and looking at their models. But I think they're always going to need to bring it back to the reality of what's actually going on. So I think this data can be, directionally beneficial, but at the end of the day, you can't use, estimated data when actually trying to create a real model. So that's really where I think it's going to help folks, stress test this as we actually have more consistent information being disclosed. The public markets certainly have robust data. I spent 10 years in the private equity space. There is no data for a lot of these organizations. Trying to educate someone within the U.S. Startup software space about what ESG and how one should calculate their carbon and wastewater emissions is trying to teach my cat how to sing sometimes, and I think that process and that education is super important to ensure good information is out there, and I think it's a continued journey to, bring everyone to the same standard that we see a public company, reporting at today.
Okay, perhaps next time we see your cat singing, yeah. Okay, let's move on again, and let's move on towards the ESG data management strategy. Obviously, the data is, as Ghislaine mentioned, there is a lack of data. There's proxy data, and not sure how useful that's going to be. So let's run a quick audience poll. And this one, to what extent has your organization developed a working strategy for ESG data management? And while you answer the question, let me come back to Alex to talk about the types of ESG data management strategies that are needed to support successful investment processes, regulatory compliance, and emerging taxonomies and standards. There's a lot going on there.
No, thank you, Sarah. I think, kind of tying back to the similar themes when we talked about proxy data, from a strategy perspective, to me, the basis to understanding, what are the goals and intentions? Are we aligning to, net zero goals? Are we aligned to measuring impact? Are we aligned to, investor or regulatory demands? I think once we put, and again, there's never one, pure priority around that process. Because once we identify what's going to be important, to ourselves as an investment manager, or to, the disclosure that we need to manage and maintain, to me, the next step is, okay, great. Once we understand that framework, what information do we need? There are a lot of third-party providers that have, real information that is, pulled from, companies directly. There are, multiple providers of that, multiple ways that one can bring that data together. To me, the important piece is to use, platforms to facilitate that process. Whether you're mastering the data, so you're creating your golden source, to me, that's really that base, goal and challenge that one should be aligned around. And I think the last and most important part of this process is continued reevaluation. You need to continue to A/B test this. Is this working? Is this meeting our requirements? How can we adapt on this? Just given the how new we are within this space, there isn't going to be a fixed way that this should operate for 5 years, let alone 24 months. So I think that's really the strategies that we see folks trying to implement here. Understand the data, what platforms, and then making sure that they're continuing to test those their assumptions and thesis here, and continue to adapt off of that.
Lovely, thank you. And Ghislaine, what sort of approaches do you see here, and do you have a favorite one for your firm?
Regarding ESG data, I think there are two sets of data. There is the data that the regulation require, and then after there is the data that you need, to build your investment process. And here it's really depending on the culture of asset manager and company. If I look at Fidelity, we have around 200 analysts, each of them following 30 to 50 stocks. And in practice, the level of details that we get on non-financial information is very high, because the deep dive of this kind of analysis moves that in average we have 500 data by corporate, and these data are going to be after by sector kind of different. And here that's the point, when you look at data for credit, as mentioned Bruno earlier, you look at cash flow and whatever the company is, what is the cash flow capability of the company? And I will say, no, that's it, but somewhere. Here with ESG, you need to deep dive. Obviously, governance, there will be a global art of data for all company, but for all the rest, it's so detailed. You need to understand what it means, because you need also to define that by geographies. If you take, for example, a bank in developed country, we cannot say that's a social impact, but if you take a bank, in a country, in an emerging market like Africa and so on, there is a social impact, and so on. So I think here we come to a point where the way we look at data has nothing to do with classic financial information data, because you need to think differently. And also you need to think with a forward-looking view, because a bit like when analysts are estimating future dividend, or you can do that on financial metrics. When you go to ESG data, so Paris alignment or every kind of things, you need to understand if the business plan that the company is doing and that we can analyze is the team that we are discussing with, or the C-level of this company are putting an house money to do what they say they can do. So there is a gap between the communication and all of that. And here we say, I don't know if it's proxy data, but it's a lot of qualitative information on deep dive, and all of that, I would say, is pretty new. It's pretty new, and that's why the data management has to be done, I would say, kind of very differently as for financial information. The way of looking at quality or compliance is completely different. Well, that's my opinion. But in practice, I see it's very different.
Okay, fine. Bruno, would you like to add anything there, as you're in similar boat?
No, I think it's very interesting comments made. I mean, from our perspective, I've been working with ESG data for, 18 years or something like that by now. I think one thing that I would say is missing from the industry is a real focus on what really is material to a company. And I think we're overly focused on processes rather than outcomes. I think there is much more insight to be gathered from performance data than there is from policies and management systems. And we spend an enormous amount of time in the ESG world worrying about policies and management systems, which frankly don't add up to much. You see plenty of companies with gold-plated policies and management systems that end up in horrible controversies and really bad performance scandals. So, I think we need much more focus on performance data, much more focus on what's material to each sector. Quite rightly, as Guzman said, you can't compare, a mining company to an IT company. It is going to be different, and you need to recognize that upfront, that the environmental, social, and governance aspects of those companies are going to be very different.
Okay, thank you very much indeed. Let's see the poll results, if we may. And Ghislaine, would you like to comment on these? They point out what our audience is, where it is at, basically, in terms of developing a working strategy for ESG data management.
I can understand that it could be either, it's very binary, either limit or good extent, yeah. Because either the company has a pretty clear vision of what is ESG, or as Bruno just said, there is a clear understanding of materiality, the impact on fair performance, and so on. You can set up a right strategy. Either, for broader company dealing with many asset classes and so on, private, for example, and listed, it's very difficult to say that you can use similar metrics, and the culture of private versus listed makes that your common framework will require a bit more work to be implemented. So yeah, I understand that this is a bit binary answer that we get here.
Okay, lovely. Thank you very much indeed. And thank you very much to our audience for voting on that question. And staying with you, Ghislaine, more specifically, how can firms manage the large volumes of granular security level data that is available for public assets and maintain compliance with emerging requirements? As you say, there's a lack of it, but there's still lots of it.
I think that's a huge challenge, because with ESG data, each company could set up its own way of doing that does not fit at all with what any data provider will come and bring on board. So, I mean, let's only look in continental Europe. The way the European regulator is asking the industry to look is using the NACE code, and the NACE code are specific European sector organization that has nothing to do, with, for example, S&P sector definition. So it's pretty difficult to get that both in place. And also what I see, for example, in European Union, there is a kind of reflex of don't choose what is American. So it's very difficult to manage this kind. And the volume, as you mentioned, what I think will be very difficult is all this data that now we are going to store, months or quarter after quarter. Here, I think there will be a huge work. And I don't have any view. What I see, it will be very difficult.
Okay. Alex, what would you say there in terms of the volumes, the managing, the making sure at the same time you're compliant and all of that?
Oh, it is certainly almost a Herculean challenge for a lot of our asset management clients. I think Ghislaine really hit on a lot of the key challenges there. Is the scale of data, it's the evolution of it, the cadence. I'm sort of curious. I'd love to hear, when you think about cadence of this data, is this now evolving beyond annual and quarterly reports? Are folks starting to look at this in more real time? With that being said, though, as an example, our enterprise data warehouse, our EDM platform, this is a commonly used platform for security masters, and bring all this data together. And this has really been a key focus of existing clients just starting to roll this use case alongside their security master to bring in ESG data to master alongside, and then others who are purely coming to us with this challenge in hand of all of a sudden we now have to disclose across a few thousand positions. How can you help us? And to me, it's really about scaling via technology. When I first started my career within the fintech space, I think one of the major challenges most folks had was, we'll say, buy versus build. And I still think, organizations who want to take that challenge on themselves, that's fantastic. If you really want to roll up your sleeves and figure out the best way to manage this yourself, there are certainly, a lot of, great ways to approach that. That being said, I always tie back this to, we worked with Hamilton Lane, and they always said, we are, investors first. We're not here to be a software company, so we want to partner with the best that are out there. I think this is the approach we try and take with our clients. how can we be, the infrastructure and the plumbing around, these different data sets and these different disclosure requirements, and really put you in the position to, simply be a consumer. You should be using this information to make the best possible decisions, meet your regulatory and investor requirements, and really be focused on that, alpha generation, and value add work for a client, not simply, stuck in this, IT, challenge that is going to continue to grow.
Okay, thank you all. Let's take a break and answer some audience questions if we can. Ghislaine, I'm going to come back to you. This is another question without an answer, I fear, but here we go. We are still having trouble sourcing the ESG data we need. How and when will this get better?
I mean, if any of us has the answer to this question, I mean, we, when looking at the first set of EET in August, so I mean, it's the first time that asset manager were providing data to bank and so on. I think only 20-25% of the field were fulfilled. So it means that really we have a lack of data. When on the other hand, we discuss with regulators, the regulator would like to obviously to get everybody accelerated, but they have a sense as well that it's pretty difficult. So if you look at CSRD, normally around 23, 24, all corporate, either with headquarters in continental Europe or doing business in continental Europe, will have to provide this information. So I think there will be a pickup of information in 2024, 2025. I don't know, that will be a sense for continental Europe. And for the unlisted, Alex mentioned it's an area, obviously, where there is some more, but the European regulator consider, especially the EIOPA, that with private equity or private debt, it must be easier to get data because private companies are smaller. So it's easier. If you have a startup in one building, they know their electricity consumption. It's simple. So the regulator consider you have to provide more data on private assets than on listed asset, especially insurers. So if they don't prove the regulators, they can do that. They will not be able to invest in private assets. So I'm pretty sure we will see perhaps this area furnishing far more information than the listed very quickly to be sure to get the money.
Okay, thank you. And Bruno, coming to you with this one. I think it was you who mentioned it, but if it wasn't, tell me. Greenwashing is a hot topic of ESG. How common is it in reality and how well is it identified? Perhaps that's something to do with what you were saying earlier about asset managers being not too sure about how to progress.
Well, I think, greenwashing is the hot topic at the moment, isn't it? And all of these standards that we're seeing come out and the regulations coming out are indeed targeting greenwashing. The trouble with greenwashing at the moment is that there isn't a standardized definition for it. And why isn't there a standardized definition for greenwashing? Well, one man's dark green fund is another man's super light green ridiculous fund. So, it's very hard to figure out what greenwashing means because it means different things to different people, depending on what their ESG objectives and their expectations were in the first place. So this is why I emphasize quite a lot in my answer that it's extremely important to educate, to be transparent, to spend time with your client and understand their sustainability and their ESG objectives to make sure that you're meeting their expectations. I always say the trouble with working in our industry is as soon as you've got the gold-plated, beautiful fund that you think meets all of the sustainability requirements, you will get an investor that spots one company in your portfolio that had a ship in Japan that was whaling. And then you're like, yeah, I forgot about whaling. so that is the key challenge here. You have to make sure that you cover all bases and that you understand your client and that you are super, super clear as possible about what it is that you are doing and how you're doing it.
Okay, so a lot of work to do on that for everybody, really. Yeah, absolutely. And Alex, coming to you with one which is easy for you, I think, and it asks, how does an ESG data provider fit into the puzzle? Are they providing the data on behalf of the corporates?
Mm-hmm. Oh, pardon me. When we think about the different data sets that a provider can offer, I think it's certainly one needs to educate themselves because it's very varied. Whether you're looking at physical climate risk, whether you're looking at direct emissions data, whether you're looking at actual scores based on a proprietary standard. There are many different ways that this data can be positioned and delivered. So I think, again, it goes back to the, what I was highlighting before. I think what, both Ghislaine and Bruno highlighted, what is the impact that we're trying to align here? What is the goal we have around this information? So if it's simple, we're a real estate manager, and we need to understand the physical risk of all our positions. Great, we need to be, aligned for a physical risk data set. Some folks can look, generically at, a more holistic, ESG score, and there's certainly been challenges with those of the accountability around it. So to me, when we think about, the data set itself, it needs to be tied back to that, main use case. And then I also think, and maybe this is not the, the best piece, but I don't think it's not putting everything in one place, meaning there are multiple different providers and one needs to be responsible to ensure they have good quality information. And certainly at S&P, we feel we have the best data out there. There are other providers as well. And what we're seeing within our client base is that it is not an all or nothing approach. They very much are looking at this holistically. They've worked with different providers. They want to make sure that they have the best information so they can understand that true impact there and ensure that they are, feeding their systems and processes with, the best available data.
Okay, excellent. Thank you very much. And we have a bit of time, so I'm going to ask you a few more. Bruno, this one is for you, I think. It says, moving into ESG investing is proving very costly. How best does the panel suggest we contain some of these costs?
So I think there are some initiatives here to deal with the cost situation, and it's definitely a live topic for many asset managers at the moment. I think, I'm encouraged by conversations around the European single access point for data, for example. I'm seeing a boom. I was actually a little bit surprised by the question that Ghislaine got around data, because I'm seeing a boom of providers. I get at least 2 or 3 emails per day from a new provider that I never heard about on ESG data. So, I think there will be more and more competition in this market, which will drive down the cost for ESG data. But of course, this is no substitute for building an opinion. And as I mentioned to you, and no matter how much data you have, you still need to go out and build that expertise, build that confidence to talk about ESG topics. And that indeed is a costly exercise initially, but I think it's long-term. It is a very good investment because ultimately this is what our clients want from us, and I think clients are willing to pay for it.
Okay, thank you very much indeed for that one. And coming to Ghislaine, also as a practitioner, this one asks, any experience or challenges integrating new ESG data types, perhaps physical climate risk or performance, buildings, energy performance, into existing data models? That's a big question. Is this something you're doing? What are the challenges here?
The challenge is, if we look, for example, at physical risk, is what do I use? There could be the classic approach to look at the climate value at risk. You consider that the carbon price is going to move, what will be the impact on the company, how the earnings are going to be, tackled. Or that could be, another approach. If you look at all reinsurers have huge and strong and real physical risk model, because they look at the cost of insuring the business. And I prefer, today working with a reinsurer who have real value, because they are forced to give the price of an insurance in 5 years, 10 years on any kind of business. So today we're finding the information. If you want to know about climate, discuss with catastrophe reinsurer. They know exactly, worldwide what are the risk. And so that's one area I think of progress regarding climate also and Paris Agreement. How the corporate are going to align. So whatever is the temperature, I understand Bruno is not fan of temperature, but there are many metrics. But let's imagine today. But we need to know where the country are. If you look on, for example, at the FTSE, the temperature of the FTSE itself is 6 degrees. If you look at the temperature of CAC 40, because industry is not strong in France, it's 3 degrees. So we need to know where they are. If you look the S&P as well is on 5 degrees and so on. So and when you look at Silicon Valley, scope 1, oh, it's great. Scope 3, they are using only coal electricity. So, the first polluter in US are the video data streaming platform. So on all this climate, there is a lot of concept. And when you deep dive, especially when you go in scope 3, where in Fidelity we are currently pretty finalizing for 1,000 and 1,000 on company, you are looking at the climate risk completely differently. we need to stop doing any video streaming. We have to become all vegetarian, to take all a bike, and we are ready to at house to use only, we stop warming the house, and here you reduce really the consumption. 70% of the consumption is based on our way of life. That's it, So, and I mean, that's the problem in climate, is putting on the table the right thing. If you look at, for example, meat, yesterday I was doing a conference here in Germany with many insurers and German regulator, 21% of the pollution and climate is coming from the meat. It's huge. I mean, anyone can change that. So the problem is getting the real problem on the table and saying, okay, what do the people have to do worldwide to make the change happening? So for climate, it's there is not only the fuel, but there is also always going to impact our habits. Come on. Okay. It's a bit of philosophy around that.
Okay, thank you. And it's coming to you. Obviously, you must work with customers on integration. Tell us a little bit about how you integrate these different kinds of data. And also, there's a question here which sort of ties in with that. And it asks what sorts of technologies could really help with managing these vast but not complete sets of ESG data, perhaps AI, ML, NLP, that sort of thing. So the integration issue and what can help here.
No, I think it's, again, I think the scale of these data sets is only growing, and ensuring we're using the most modern technology is always going to be the largest benefit, though. I feel like anything, similar to, let's say, blockchain, of a few years ago, and, as now we kind of take that, we'll say, brand strength that, ESG has. We don't want to, get too far ahead of, ourselves when it comes to that, process. We want to make sure we're implementing, robust and tested systems that, are able to scale with this data. They're able to connect it successfully and ensure that we're always working with the most complete and accurate data set possible. We certainly see a lot of opportunities, from our perspective when it comes to data ingestion. We use a lot of AI machine learning for data scraping. I still think, and I'm sure we all chuckle, that a lot of our industry is still based on PDFs. I'm hopeful that one day that may finally be sunset and go the way of printouts and stuffing envelopes. But there is still a lot of the structured data sets out there that are continuing to grow. Particularly in the private markets, there are a few different initiatives out there, whether it's the ESG Convergence Initiative, here out of the U.S., where different managers are agreeing to disclose different amounts of data between themselves and their investors. As this data starts to materialize, we're prepared, here at S&P to, automatically ingest, scrape, and master that information to be able to fed into not only our Sustainable One business, but also directly into our, existing, both portfolio monitoring and data warehouse platforms such as EDM and iLevel. There are certainly other providers out there. To me, the most success we've really seen is for folks who are diversifying across the public and private world. There are, we'll say different, those different worlds are at a different maturity point within, their life cycle. And, that brings its own set of challenges as we start to master this data together. And to me, really ensuring you have robust processes and data teams to ensure that is scalable, is really what you need to be focused around. And, we certainly have a chunk of platforms that our client base has been very successfully implementing around these challenges.
Okay, thank you all for your questions and to our speakers for fielding them so very well. And coming back to Ghislaine, how do you see these things developing? ESG taxonomies, other such as social taxonomies that we touched on earlier, and will these present more challenges, more opportunities? How do you see it panning out going forward?
I mean, from a data perspective, I think there will be even more work for Alex and for everybody, because in social there is. Social means societal, what impacts the society. So, I mean, it could be a lot of things. And it's really linked also to the culture of countries, So when I look in the working group, where currently there are around 15, 16 countries from Europe, the cultural differences are so strong. So if you go on environment, obviously there's a classic nuclear coal. Well, when you go to societal and social, the discussion could be very, I would say, sportive. If you go from UK, US, where you have a kind of sense of strong governance, I will not use the word governance for French, for example, or Italy. I will not say we don't care at all, but you never speaking about diversity is illegal. In France is illegal. I cannot get I'm not allowed to ask anything. And in continental Europe, in many rights, a lot of that are illegal. So you have a kind of cultural confrontation. And so societal, I think it's opening a bit a Pandora box, because there are things where it will be simple to say infrastructure, for example, is societal. You bring highway, but on the other hand, it's polluting. But for me, that's an area where there will be even more data. And what just, Alex mentioned, using all the artificial intelligence and so on. I mean, all of us we try to use this because we need to gather data on the way. We need to find this information to try to fulfill. But I'm afraid as well that also when we dig into ESG, we start also generating some areas as well of conflict between countries, between views, and so on. I don't know, Bruno, what you think from your Dutch perspective, but that's what I see in the working group, that when we discuss exclusion, we discussed exclusion in the EET. It was hours of fight, because I make it simple. The German want to exclude nuclear, the French are excluding coal, all countries are excluding tobacco, but not Sweden, because in Sweden everybody is using tobacco, and so on and so on. I don't know. What do you think, Bruno, on this one?
Well, I tend to agree with you. Societal issues are really, really hard to pin down. I even just in our firm, we have endless discussions about these topics. And I think in a way it's healthy, because we're trying to reflect our clients' priorities, right? So it's always a challenge because we have a very diverse set of clients. I will say, though, there are certain metrics that you can, I think they're pretty much consensus driven. Just like today, we've reached a point where GHG emissions are no longer questioned, right? Like it's a standardized set of metrics. I do think, it's brilliant that we've now come to, principal adverse impacts, where you have certain social metrics like gender pay gap. I don't think anybody would disagree that it's a good thing to measure the gender pay gap. I would argue there are several other metrics you can measure like that towards quality of staff management, such as, employee health and safety accidents, or hours of sick leave granted by the company, the things that really indicate staff engagement in a company. I don't think are very controversial. So I think I share your concern.
In France, asking for what you say is controversial and illegal. Asking engagement of employee, it's illegal to ask that. So not in Netherlands, but
yeah, no, here we could theoretically ask companies to disclose at a global level, not obviously employee by employee, but you can ask at a company level, company engagement. So I think these things are, they would give you a better sense of performance, and I'm a big fan of really hard performance data. I think that's the only way we're going to move forward here.
Okay, Alex, what would you like to add on that one? Obviously, there's trouble coming.
No, so I think there's sort of two things that pop to mind on this one. So one, I think this goes back to some of the earlier points Ghislaine made around the different jurisdictions and regionality and the challenges that arise from this. That it isn't universal, and that while the goals are universal around we'll say understanding an impact, access to that data has to be aligned to the regionality of where these different companies and people are. At the end of the day, to me, that's the beauty of ESG. It's actually focused on the physical and tangible things that are occurring. What is the company doing? What are the people there doing? And how can we better, help and facilitate that to grow? In the U.S., we certainly don't have as much, we'll say, restrictions on that. It's a little bit more of the Wild West when it comes to data capture and reporting. There isn't, much compliance beyond, some healthcare regulations. So as long as you're not disclosing direct individual healthcare data, there's a lot more access. And I would say, particularly with my private market clients that I've been working with, looking at headcount and understanding that, breakout by gender and diversity, has really been, one of the early and easy adopters for these organizations to roll out. So this is where they've really started to build a more robust foundation, and they're starting to drive, we'll say, a beneficial impact and change around that. There's certainly been a bit of a wake-up call that, more holistic understanding and a diverse workforce is actually going to be much more beneficial to the company itself, but without access or, a full understanding of that data, nobody even has an idea that they should be, taking a different, or a more forward-thinking approach. So again, I think this comes down to, one, ensuring you have platforms that, are aligning so you're not disclosing or capturing data that is, regulatorily excluded. The second piece, around this social data is ensuring, again, that you're using it to drive change. I have a client as well that looks at, not only headcount, but also the amount they put into employee pay, as well as research and development. It's like the three main KPIs that they use to define, their investment product there. And they were kind of scratching their heads saying, why isn't everyone doing this? Like, we're showing the impact we're driving today. How isn't this, universally agreed upon? So that's where I see, and I think, or I'm hopeful I see the industry moving is to that type of lens and that mindset. This is not value extraction. This is value additive work, that we're building something for a sustainable future. And I believe that these frameworks can help us get to that point, especially since there isn't, any, we'll say, legacy scar tissue in place. We're not changing an existing process. We're defining something new, and these frameworks can really help us get to that, promised land.
Okay, great. That brings us nicely to my final question. I'm going to ask all our speakers for a little bit of advice for the practitioners out there who are being challenged and working with the ESG taxonomies and standards. Bruno, would you like to start here? What's your guidance?
So three pieces of guidance I'll give. Number one, trying to read all the tea leaves. I think every piece of guidance is helpful at the moment in the EU. Given that this is a new piece of legislation and we're all learning as we read it and trying to implement it, I would say don't expect too much from your lawyers. Everyone is on the same journey, really, trying to interpret these rules. I think it's the second piece of advice is it's okay to have an opinion, but be clear and transparent with your methodologies and your assumptions, and education is the key to managing your clients' expectations. And last but not least, keep it simple. I mean, at the end of the day, we're doing this for our clients, and they don't have the time for complex economic and sustainability theories. So their objectives are largely, I would say, most of the time more emotional than rational. If it's too difficult to explain to a client, it probably doesn't meet her ESG objectives.
Okay, Alex, what are your thoughts here?
Yeah, and I think perfectly. You stole my my first bullet there, Bruno. Keep it simple. To me, it's starting on that, that base foundation that you can grow and build on top of. To me, again, it goes, the next theme is, that simplicity is understand what the company is doing. To me, that always is the brass tacks in my career within the private market space. I would always advocate, the most valuable thing these private companies or these private investors on is the data. No one has access to this information. Understanding that nuance can either give you insight into future deals, understand when the best time to exit or, reinvest in a company is. So without that, tangible understanding, it's just an Excel model. And I think ESG is really focused on, taking us, to that higher level view. And then really, this is more just kind of, base process for anything, and continue to reevaluate. Is this aligning to our goals? Do we have the right data? Do we have the right system in place? We can't just sit back on our laurels and say, hey, we rolled this out and now we're good to go. To me, those are probably the three main themes and advice I would give someone as they, enter or continue on their ESG journey.
Thank you. And Ghislaine, some final words from you there, please.
I will take another angle. I will say first, be careful to not mix your ESG value with the ESG value of your clients. I see many manufacturer, asset manager, or bank, having their value and that they transfer in their product, and they try to convince their client of their value. So, I mean, it's always client centricity. As an asset manager, we say that is for me important. Secondly, obviously simplicity will be your target, but there is this kind of compliance and exercise. So I would say on this one, take care of your reputational risk, because ESG is something that everybody understands. If you look at financial report, no one understands. But if you claim something on ESG and all the reports that you are bringing in parallel say the contrary, you are going to have an area of trouble. And I think that's the first area of trouble of anyone with vocal on ESG. And the last one, in terms of guidance, I really come to the point of Bruno. I think there is a good writing of regulation, and the regulator in Europe try to do their best to make it more and more simple. So I will say read it. And if you don't want to read it, look at the EET, in which we try to summarize all regulations. and we put everything inside. We keep only, I will say, the skeleton of the minimum things that are needed.
Okay, fantastic. And Ghislaine, thank you all of you for sharing your expertise and experience today. And thank you too to S&P Global Market Intelligence for sponsoring today's webinar. Before we close, just a few 18 group webinars that may be of interest to you. If you scroll down your screen to additional options, you can sign up for our forthcoming webinars covering approaches to ESG data for analytics, how to manage ESG data for controversy monitoring and portfolio screening, and on a different topic, how to harness the power and potential of ownership data. That said, that's it for today. So thank you again to Alex, Bruno, and Ghislaine, and thank you to all of you who've taken part in the webinar. Please complete our feedback form, as we're always keen to hear your views and improve our products. Meantime, thanks again and goodbye.